All right, good day, folks. So this mystery stock that we're looking at here just is a recipient of a fresh Schedule 13G. This 13G is a filing with the SEC that reports a party's ownership of a stock which exceeds 5% of a company's total stock issue. So in layman's term, there has been a large investor that has now increased its stake to over 5%. And it may not be such a mystery as the ticker is right here. So we're looking at Camping World. Camping World, probably not the most exciting stock, probably not on most people's radar. In fact, we're trading around $7.50. But if you take a look at this, going back 10 years, we're showing upward movement or upward trajectory based off the last 10 years of price data. And so where we are today, and based on who is behind this, by the way, it's Citadel Advisors. Probably have heard of Ken Griffin, showing conviction here, and price looking like it has a shot of going higher into the early part of August. I want to get long this stock. Now, if we take a look here at the chart, we have traded right down into weekly demand, weekly tight levels down here, again at about $7.50. And you can see the reaction that we're having. Again, this is exactly what we would anticipate and what we're used to trading these levels. And so I'm looking to take a position here. Look at the volume coming in as well. So right now the stock is pretty cheap, $7.50, under $10. It's affordable by most people's standards there. If you wanted to participate just by buying the underlying shares, that's the most direct way of saying, hey, I want to get long, I want to own this. Or we could get into the options market. Couple of ideas that I'm looking at here. Looking at the September 18 expiration. So that's going to get us through up into August. 137 days as of this recording, 135, 137 days left till expiration. So we could look to buy the $7 calls. They're trading about 175, 180. 175, 180. So your break even there is going to be about 875, 880 there. On the trade, so looking at the 7 and or 8 call options, the 8s are going for about, let's see, as of this recording, about 115, 120, so a little bit cheaper. Alternatively, if you really like the stock, what you could do is sell a cash secured put. And right now on the chain, I'm looking at the $6 strike, the 6 puts. They're going for about 70 cents. So you could sell the $6 puts, bring in 70 cents. That would take your cost basis down to $5.30. So $2 from where we are now. So if you liked it at 7.5, you would, I would assume, love it there at $5.30. So a couple of different ways that you can play this: buy the stock outright, buy call or call debit spreads, or sell put spreads and collect premium, and understand that you'd be okay getting a sign. Now, if you didn't want to get a sign, you could just close it out if the market did turn south. But I like the risk reward here. I like the risk reward. I like the price of the stock, the level of where we are from a technical basis. I also like the fact that we have positive or favorable seasonality ahead. And I like the fact that Ken Griffin of Citadel Advisors is showing conviction here on this trade. Good luck at trading. We'll see you in the next update.